Welcome, Tradespooners. Let's take a look at today's pick for March 21st, 2014. We're going to look at a short position in General Mills, Inc. That's ticker symbol GIS. Taking a look at our proprietary risk-reward rating here at Tradespoon, we're coming in at a 3, which is in the low end of that scale. And we're also looking at the value momentum, which is at a 4, which is right at that mid-range. As always, take a look at our proprietary analysis report here from Tradespoon, where you can drill down to not only our value, momentum, and risk-reward components a little bit more, but also get deeper into our Tradespoon scores, as well as our analysts' technical and fundamental reflections. Excuse me. Taking a look at the price action and option action here in GIS, the closing price as of March 20th was $51.05. That's right off of the 52-week highs of 53.07 and off of those lows of 46.18. The implied volatility change percentage is only at 10%, so that means that the implied vol right now is only 10% higher than the 52-week low, and that's where the percentile is located at this juncture. So not a heightened, huge expectation of potential violent moves. The return on capital is 75% in the spread strategy, and the probability of success of that strategy right now is at 55%. Taking a look at the estimated move, it's being calculated right now at $1.10. And that's going into April expiration. Let's take a look at the picks. The stock trade is sell short stock, GIS. We're going to do that at a limit price of $51.05 or better. Now we're going to take a target gain $6.10 below the entry price on this short stock position. So that basically is going to get us out right around $45. So we're going to have a buy limit down below at $45. And we're going to work that good until cancel. Now we do want to limit our losses here, so we're going to put a buy stop limit order above our entry price. A buy stop limit order at $57 roughly. That will work good until cancel, and we'll trigger that just in case the stock does start to trend higher. Now taking a look at the options trade, we're going to buy the April $52 puts. We're going to put a limit price in to buy those at $2.14 or better. If we're filled at $2.14, we're going to put a sell limit order to take profits on this put pick at $4 and roughly 30 cents. You could do it at 28, but that's your prerogative. So there'd be $4.30 or $4.28. We'll have a sell limit working good till cancel. We are willing to lose the $2.14 debit that we're putting into the strategy, so size appropriately. That means don't put any more than 2.5 to tops 10% in this particular pick of cash available or percentage buying power available at the time of the trade. The option spread strategy, we're looking to do a bear put spread. Now we do have videos on these particular spreads, so take a look at the training videos. We'll show those in a minute where you can learn more about this particular strategy. It's only take you about 3 to 5 minutes to get through that particular strategy discussion, the bear put spread. This is a debit spread, so we're going to be buying the April $52.50 puts for $2.14. Now, we are going to be selling the April $50 puts at 52 cents. That means that our net debit is going to be $1.62, and our target gain is going to be 88 cents. In other words, when this spread is basically trading at around $2, and let's just say $2.50, $2.60, we'll say $2.50. We're going to basically cut out of this trade. So you're going to have a sell limit for this spread to sell it at $2.50 or higher. And again, that would be your max profit. So if you want to start cutting profits somewhere in the $2.30 to $2.40 range, that is your prerogative. Again, I would also use very prudent size and capital management. No more than 2.5 to tops 10% of the cash available or the percentage buying power. Scrolling down and just taking a quick look at the stock background and analysis, you've seen that the stock for the most part had been in a nice orderly uptrend. There was a little volatility in here, and we saw a pullback, but it held its shorter-term moving averages, the 10 and the 30-day, and we see that the price action now has resumed its upside. We want to see if that's going to continue, but we did see that there was some movement there on the stock side. Taking a look at the fundamental and technical components, the one thing that you want to see here is any binary events. Not only do you like to see this technical and fundamental information, but you want to see binary events like earnings or conferences or things of that nature that could move this stock. As I said earlier, The vol percentage right now, in other words, that IV percentile where the vol is right now, is only at 10%. So there isn't anything on the horizon that we could see over the next couple weeks going into April expiration at this juncture. As always, if you have any questions, considerations, you can email us at tradespoon.com, info@tradespoon.com, and take advantage of the training videos that we have here, as well as our upcoming webinars. We have a couple webinars next week that we're going to be doing where we're going to be discussing how to use LEAP options, those options that have 12 months up to 2 years as stock replacement strategies. So stay tuned for those. All right, folks, that is the pick for March 21st, 2014. This is the final trading day for this week, and it is expiration Friday. For those of you that were trading March options that are expiring, please take advantage of making those adjustments accordingly. Take profits, cut losses, or just roll positions if you need to. All right, folks, that's it, and we enjoy having you here, and we want to thank you, and have a great weekend, and we'll see you next week.